All right, so the local market closed comfortably in the green this afternoon. We had some good showing by the miners, but of course trading was not as high as it should be given the fact that it's the 4th of July and that's a huge American holiday in the United States. Gary Booysen from Rand Swiss joins us now. Gary, thanks very much indeed for your time. So ordinarily you'd look at the all share 2% up, there's green all over the place. We can't start celebrating because as I said, I would imagine volumes are low, America's been closed. What did you make of total market activity today?
Yeah, absolutely. We're having a nice positive day, but this is, I suppose, something that you see fairly often in bear markets. You see these big one-day rallies, and it's really been driven by the resource index, which was up well over 3.5%. The all-share index closed up just under 2%. But the financials and the industrials also looked pretty solid. Industrials only rising 1.05%. And that was as Naspers and Prosus, that pair took a little bit of a breather with some selling coming through from China this morning. As you mentioned, whenever there's a US holiday, the US really does drive volume in international markets. So volumes were a little bit light today, but we still had a tailwind from the S&P closing up over 1% on Friday. I think that's where some of the optimism is coming from.
Yeah. Look, not much company results, but I mean, one in particular that's directly linked to what's happening with infrastructure, for example, PPC. Cement is used when infrastructure goes up. We were talking about policy uncertainty just a few moments ago. Yes, PPC releasing results, and there is this debt issue that this company has to sort out. But one wonders whether or not this lag in infrastructure is also just keeping cement sales down. It really is an indicator, isn't it?
No, absolutely. A company like PPC, which has an incredibly long history, PPC has been around for, I think, about 130 years. It has to have some sort of infrastructure spend to capture in order to really be successful as a business. So, as you said, in the results today, a lot of the information was already known from a trading statement that came out on the 22nd of June. But the business paying down its debt, it's got around R1 billion worth of debt still on its balance sheet, but it has managed to pay down 1.2 billion. And this is really just through the sale of non-core assets. So it sold off PPC Lime, its Botswana aggregates business as well, which has just helped to shore up the balance sheet, which I think is it's something that we're seeing across a lot of the South African companies. They're just looking at the uncertainty in our environment currently, and they're saying that it's probably better to hang on to a little bit of cash, be a little bit more conservative, especially with rising interest rates. And while we did see PPC lifting their top line numbers, so their revenue by 11%, doing very well in Zimbabwe and Rwanda, their headline, at least their bottom line number, so headline earnings per share coming in 3 cents per share lower.
Yeah. I want to go back to, probably the talk of the day as the week starts. We've got still stage 4 to stage 6 blackouts in the country. And then you've got the terrible news that we will be seeing another record price in petrol and in fuel overall come Wednesday. I mean, again, putting the burden on the consumer. So much of the companies locally that we see, from retailers to banks, really depend directly on this economy. And I'm just wondering, it's not really a pretty picture for the consumer going forward. And by extension, some of those companies might have to suffer.
I don't think it's a pretty picture for the consumer, but it's not a pretty picture for firms either. And by extension, it's not a pretty picture for government, because tax revenue is also going to be under pressure. We unfortunately all work together. So looking at it, of course, the load shedding is going to have a significant impact. We see it in the currency. Whenever we have, escalating load shedding, the announcements of stage 6, for example, you immediately feel that in specifically the rand dollar pair. But if you look at load shedding specifically, if we are to have level 6 for a short period of time, a couple of days, a few weeks, it probably isn't going to have a significant impact on the GDP growth forecast for the year. I don't think it's going to change the opinion of the credit ratings agencies, for example. But going into the second half of the year, if this becomes a protracted problem that we see stage 6 for a long period of time, absolutely, this is going to revise down estimates of growth for South Africa, and everyone is going to be impacted, the consumer included. Looking at the first quarter numbers, manufacturing really did put in a strong showing, and obviously with as you say, the rolling blackouts, and also the idea that we've got interest rates rising fairly aggressively on the back of what's happening with central banks internationally, it's going to be a difficult environment, and I'd expect manufacturing specifically to be under pressure. That said, you look at the business confidence numbers as well. Business confidence in South Africa is certainly slowing and declining. So I think we're in for a tough time. I think the second half of 2022 is going to be difficult.
Yep, no, I'll take what you're saying. Gary Booysen from Rand Swiss, thanks very much indeed for your time. Again, let's just take a closer